One that we have is on Tata Technologies. Venkat from Chennai is holding 200 shares, bought at the levels of 800. He wants to know as to what should he do. Vishnukant, again, your view on the charts?
Well, so we have seen the stock has, garnered some bullish momentum in recent days, but still the stock is trading below its 200 exponential moving average. But the way prices recoup from its 52-week low, I believe one should adopt buy the dip strategy. These levels are not good, but I believe any fall close to 580, 590 will be an golden opportunity to get a fresh long for the target of 660, 680.
All right. The next one that we have is on Tata Capital. Shankar from Bengaluru is holding 710 shares of Tata Capital, bought at the levels of 330 rupees. Wants to know if he can add more of 100 shares at the current market price. Would you recommend that, Vishnukant?
Well, so definitely not. The stock is, trading with the stock is trading with a bearish trajectory. So I believe if any bounce, comes close to 320, 325, that will be an opportunity to get exit from the counter.
All right, we've got our next caller ready. Muralidhar, I think, is calling us from Hyderabad. Muralidhar, very good afternoon to you. What's your query about?
Yeah, good afternoon, ma'am. I have a query on Websol. I have been holding it for the last 6 months at an average of 89, and the current is looking around 100. So what is the next 6 months to 1 year target?
Okay, Muralidhar, got your question. I'll take this up with Vishnukant. He wants a 6 months outlook on this one, Vishnukant. The stock is currently trading at 100. He's bought it at the levels of 89. What would you recommend?
Well, so the stock is trading above the short as well as long-term moving averages. So I believe it has potential to reapproach to what it's recently formed a top that's somewhere around 128, 130. So I believe why should he should hold the positions with keeping the stop loss below 88.
So that's the view coming in with regards to where Websol goes. The next one that we have is on Varun Beverages. Our viewer Tushar from Jaipur is basically holding 250 shares at the levels of 412. Says that he's incurring a profit of around 23% right now. So 24,000 of in terms of amount is where the profit stands. Wants to know whether he should continue to hold, average, or exit at the current juncture. Your view on this, Vishnukant?
Well, so it's a really bullish reversal candidate, and recently stock has regained their all key moving averages. So definitely one should hold the positions for the target of 550, 580.
Okay, all right. So that's the view on Varun Beverages. The next one that we have is on Sri Renuka Sugar. Our viewer E. Venkat Ramanan is holding at 1,000 odd shares at the levels of 30 rupees per share. And says that he has a 1 year time horizon, wants to know whether to average, sell, continue to hold, what should be the next course of action. He says that he's a senior citizen. So your view on this, Vishnukant?
Well, so it's like a falling knife, and I will not suggest to hold this counter, in fact, because there is also government policies on ethanol, in fact. So, but the stock is currently trading very close to its a very crucial horizontal support. But the way prices are trading and behaving, I believe that support levels will definitely invalidate it in a near term. So, one can get exit if there is any bounce in the prices close to 25, 26.
All right, we've got, I think, our next caller. But before we take that, I think we've got a query on Texmaco Rail. I think Rakesh from Kochi is asking whether it's good to continue to hold Texmaco for the next one, till Q1 2027. He's bought 6,000 plus shares at an average price of 126. Vishnukant, your view on the charts for this one?
Well, so on a chart, stock is looking up pretty good as long as prices are trading above 102, 103 sort of level. So definitely she can hold the positions, but yes, definitely maintain their stop loss because it's a very crucial support. If prices goes below that level, the continuation or resumptions of the bearish journey will be seen. So with the stop loss below 102, one can hold the position. On the higher side, I'm expecting 138, 140 can be one card.
Okay, all right. The next one that we have is on MTAR Tech. Divya is asking whether this is the right time to make an entry into this counter from a long-term perspective. Siddharth, a very good afternoon to you. Your view on MTAR Tech?
So hi, good afternoon. I think if you look at the company has been delivering strong numbers, plus they have raised the guidance for FY27, and even after that they have been receiving strong order book wins. So overall, the view on this space is very positive. The company has a very strong earnings growth outlook. So in terms of revenues, we are expecting about 60% earnings revenue growth, and earnings should grow about 80 to 90%. So on back of high growth, we believe there is still room for upside in the stock MTAR, so should continue to hold.
Next one is on HFCL. Somesh from Kerala plans to invest in HFCL at the levels of 135, and he wants to know the short-term target for this one and whether this is the right time or should one wait for more time is what he wants to know. Vishnukant, your view on the charts on HFCL?
The stock is looking quite good, but the thing is that the stock has deviated too much from their key moving averages, and it has gone up sharply from their 52-week low. Let the prices come down towards 118, 119 sort of levels. So where we can build a fresh long position in HFC.
Okay, we've got another caller. Ajay, I think, is calling us. Ajay, a very good afternoon to you. What's your query about?
Yes, ma'am. Ma'am, I am Ajay. Actually, ma'am, I have a share of 25,000, FCL, Fenotex Chemical Limited.
Okay, interesting.
On 25 rupees price.
Uh-huh.
So मतलब ये मैं इसको होल्ड करूं या फिर सेल कर दूं?
कब खरीदा था अजय आपने इसको?
मैम इसको ये 6 मंथ जब ये इसके मैम ये स्प्लिट होने के ठीक पहले हमने ये परचेज किया था।
अच्छा, ठीक है, समझ गए। तो आई टेक दिस अप विद सिद्धार्थ, ये स्टॉक आज इसलिए बस कर रहा है क्योंकि इसके नंबर आए हुए हैं और बहुत अच्छे आए हुए हैं, इसलिए आज स्टॉक इतना ऊपर है। बट अजय ऑलरेडी 1 लाख के ऊपर के प्रॉफिट पे बैठे हैं, तो व्हाट वुड यू सजेस्ट फॉर समथिंग लाइक फिनोटेक्स केमिकल? शुड ही कंटिन्यू टू होल्ड, एग्जिट करे, क्या करना चाहिए?
So, Mahima, unfortunately, we don't cover Fenotex, but I think if you look at the overall chemical space, specialty chemicals are benefiting from the fall in rupee because a lot of these specialty chemicals are export-focused companies, and rupee at all-time record lows definitely benefits them in terms of margins. So I would say, while I have a view, I think should look at booking partial profits at current levels. Maybe you can take a technical view.
And it's a very small company, Siddharth. So, I mean, it's a fair, thing that if you don't track it, because it just has a market cap of around 3,400. But Vishnukant, any view on the charts for Fenotex Chemical? The stock is up almost 18% as we speak at its day's high point.
Yes, definitely. From the technical standpoint, prices, is forming a sort of rounding bottom kind of pattern. And the good thing is that the prices has, come up from the all key moving averages. So I think the short-term hurdle has also been taken out. So I believe this bullish continuations are likely to remain intact, and 36, 37 sort of levels can be seen on the card. So technically it's looking quite good.
The next one, Siddharth, that Satyan has a query on is Astra Microwave. By the way, he's asking about 2 different stocks. He always has a nice way to, bring in 2 stocks in one question, which we generally don't allow, but Satyan, we're allowing it this time. So he's asking whether to go ahead and invest in Techno Electric or Astra Microwave from a long-term perspective. Which one would you prefer right now, Siddharth?
I think Astra Microwave is more of a defense play where we have a positive view. I think the company has been consistently delivering, and our view on defense continues to remain pretty strong. So Astra Microwave, something that we cover, we have a positive view and a buy rating. I think one should continue to hold that. Techno Electric we don't cover, but the company is now incrementally a play on the data center theme, which is picking up pace, and a lot of interest is there. So I think that is where we don't have a fundamental view, but clearly between the two, Astra Microwave, something we cover and have a positive view.
Okay, all right. The next one is on IREDA. Arun from Bengaluru is saying that he's holding 200 shares of IREDA at the levels of 140 and wants a long-term view on this one. So Siddharth, I'll stick with you for this one as well. Your view on IREDA?
So again, another stock we don't cover, IREDA, but I think the insurance space overall is a bit struggling, and we are seeing that the quarterly results have not been that great. I think if this is something from a long-term perspective should do well. Clearly, I don't have a near-term, short-term view.
Vishnukant, your view on IREDA on the charts?
Well, so my stock is currently falling and it is currently trading below its short as well as long-term key moving averages. So there is a space to extend this fall on a chart, and the fall should be containing somewhere around 119, 120. But yes, one can go long in that price zone with keeping a stop loss below 113, 112. And on the higher side, I'm expecting prices can take a U-turn for 136, 138 sort of levels.
Okay, all right. We've got our next caller. I think Bharat is calling us. Bharat, a very good afternoon to you. What's your query about?
Good afternoon, madam. I am holding Welspun Corp at the price of 1373. Quarterly results will come this week. Can I hold or average current price?
Yeah, so you're looking at a short-term perspective, if I'm not wrong, Bharat.
Yes, sir.
Yeah. Okay, Vishnukant, your view on Welspun Corp and whether it is kind of advisable to trade in these counters just before a corporate action?
I mean, from the technical standpoint, the stock is looking quite good, and it is, just currently trading above the all key moving averages. Apart from that, the all key oscillators are also generating a bullish divergence, in the stock. So I believe for a short-term time frame, as long as prices are trading above 1160, 1170 sort of level, so definitely hold the positions, but maintain stop loss below that and keep drilling the stops.
Okay. The next one is on SBI. Prashant from Hyderabad wants to know if this is the right time to enter from a short-term perspective. Vishnukant, I'll stick with you for this one. SBI, how is it looking like on the charts?
Yes, undoubtedly, it's a portfolio stock, but yes, there has been some tactical headwinds on the graph as the prices, just collapsed below its 200 exponential moving average. But I believe, there is no very much pain in the counter on the lower side. 930, 910, 900. 905 sort of levels will definitely provide an opportunity to go fresh long in the counter. So one can go long in that price zone.
Okay, Aparna, I think, is waiting by and calling us from Vizag. Aparna, very good afternoon to you. I believe your question on Taril.
Yeah, hi ma'am. Very good afternoon to all of you. Yeah, ma'am. I wanted to buy transformers and rectifiers, fresh entry. So what is the price to buy and what is the short-term and long-term view on this?
Aparna, did you study this on the charts by any chance, or did you see the fundamentals of the company? Why do you want to buy this?
Yeah, it's a good company, but a few issues are there. So the stock has fallen and corrected much.
Sure.
So,
Okay, got your question. I take this up with Siddharth then. Siddharth, your view on transformers and rectifiers?
Mahima, I think if you look at, there was some issue with regards to some of the global order book, and one of the contracts got cancelled. I think this entire space, the transformers, distribution, power stocks are doing very well on back of the high power demand in India, on back of A, the strong summer season, B, the expected economic recovery, and C, more importantly, the AI and data center usage expectation of demand. But again, a stock that we don't cover, and I think you'll have to wait for things to fall in place before the stock can start performing. So at current juncture, my suggestion would be to avoid.
Okay. Shakti Pump is the other one where our viewer wants to know from a long-term perspective if we can continue to hold. He's got 79 shares at the levels of 649. Bhanu Prakash wants to know. Siddharth, a quick view on this one.
So unfortunately, another stock we don't cover, but I think the stock had done very well in the past. Valuations have been on the higher side, and the earnings delivery is not in sync with the valuation, and hence the stock price is witnessing some correction. So again, I would suggest to wait for a few more quarters for things to improve.
Okay, all right. So that's the view coming on Shakti Pump. But it's time for a rapid fire round. Vishnukant as well as Siddharth, try to keep your answers as short as possible. The first one is on power stocks. Which one is a better bet right now from a long-term perspective, Siddharth?
We like two power stocks, A, Tata Power, and B, JSW Energy.
Okay, Vatik Babag bought at the levels of 1410. Continue to hold. Dr. Mohan wants to know. Vishnukant, your view? Vatek Wabag is the counter.
Yes. Well, so I would say stay away from the counter. It is showing a bearish, divergence on the chart.
Okay, fresh entry in Ipca Laboratories from a slightly long-term perspective. Does it make sense? Siddharth, any view?
Yeah, pharma is doing better, and in that Ipca is something that we like. It's not among our topics, but definitely pharma sector in this current environment is doing better. So we have a buy rating with a 1800 target price.
Okay, Apollo Microsystems, 1,000 shares bought, I think, at the levels of 190. Continue to hold, Vishnukant?
Yes, definitely. Maintain the positions, but maintain the stop loss below 269. On the higher side, I'm expecting 330, 340 will be on card.
Okay, Bank of Maharashtra bought at the levels of 70. Our viewer Venkat wants a long-term view on this one. He's already holding 250 shares. Siddharth?
Yes, I think among the few PSU banks which have shown good numbers plus valuations are comfortable. The stock has rallied now and I think trading near fair valuations. So I would say hold, don't add at current levels.
Okay, Restaurants Brands Asia is the other one. Ram from Chennai wants to know whether they can continue to hold this from a long-term perspective or not. He's bought 3,500 shares at the levels of 76 rupees. Would you recommend that, Siddharth?
Yes, I think that's a thing that looks comparatively better. I think if you look at the QSR, numbers are not that great. We are waiting for things to improve. But I think that theme that will play out over a longer period of time, plus the focus on the newer segments like the BK cafes, Burger Kings, I think plus the Indonesia acquisition, that recovery will determine the near-term performance. So continue to hold RBA, yes.
Okay, PNB is the other one from a 6 months perspective. Continue to hold average. Vishnukant, your view?
So Punjab National Bank currently do not build any long position. Prices are likely to come down towards 92.
Okay, SBI Life Sciences 200 shares bought at the levels of 994. Continue to hold for a long-term perspective, Siddharth?
Yes, SBI Life in the CDMS space is a very strong business. Continue to hold.
Okay, TCS from a long-term perspective, continue to hold, bought at the levels of 2730. Siddharth?
I would suggest reducing exposure to the legacy IT companies. Better to reduce given the growth challenges.
Okay, Apollo Tyres, is this the right time to make an entry or any other tyre stocks that you like on the charts? Vishnukant, any view on this one?
Well, so no stay away from the entire tire space because of rising crude oil prices. So no view on that.
All right. Okay. So that brings us to the end of this rapid fire round as well as Ask Profit. Vishnukant and Siddharth, thank you so much for taking out the time and helping us answer all those stock related questions. But viewers, with that, time to step into a very, very short break. But we'll be right back with India Market Close on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Mahima Vajrajani. Mahima, it's been a roller coaster ride today, hasn't it?
Absolutely. I mean, the recovery that we've seen from the day's low point plus IT stealing the show, completely a surprise, for, at least for the IT pack.
It is. You know, look at the bottom of the screen and here you will see that the advanced decline ratio is not really anything to write home about.
Yeah.
But we certainly have made quite the comeback for the benchmark Nifty 50 trading at 23,600. So the recovery is quite substantial. Take a look at that. And it's almost 2 days worth of moves in one day, right? That you've seen. You saw that sharp gap down at the start of trade and then the recovery through the session, and quite a bit, as Mahima was pointing out, has to do with IT. We'll come to that in just a bit, as well as the private sector banks. So pull up the heat map for the Nifty 50 and we'll look at what is contributing to this. So pretty much still being ruled by the reds, the declines. Mahima, Power Grid stands out as well as Tata Steel, doesn't it?
Yes, and Tata Steel, I think Q4 numbers were good on the back of good realization as well. But I think the street right now is looking, and we've also seen a lot of run up in this counter. So probably that's the reason as to why the stock is kind of seeing some profit booking today. But I think IT is leading. Tech Mahindra up by about 4%. Infosys also up by about 1.6%. Bharti Airtel also standing out, up by about 1.5%. And you have Bajaj Finserv, JSW Steel also doing fairly well. Some names like Kotak Mahindra and Sun Pharma have also, come off from its day's low point by quite a bit. So these names also doing fairly well, and other IT names like HCL Tech and Wipro also doing fairly well.
So the entire IT pack, pull up the contributors chart for the Nifty 50 and you will see the contributors chart for the Nifty 50 if we can. This is Nifty IT, but Bharti Airtel taking the most ground, and of course the telecom space is a whole in focus on account of the Vodafone Idea update and the results that came through. We'll talk about that in just a bit as well. But then it's the private sector banks, it's IT. It's ICICI Bank, HDFC Bank. HDFC Bank, by the way, started out gap down, but it's recovered quite a bit of ground. On the other end of the spectrum, you do have State Bank of India. Pull up the advanced decline ratio for the whole market and you will see that it has narrowed, but not by a very large extent, and that's because the broader markets continue to remain a tad bit weak. So pull up the mid-cap index, it's still down about 0.5%. There is pain in the small cap index, which is down about 1.7%. This is where the selling continues to stay the case, right? But pull up the IT index, and this is one of the big talking points today, the Nifty IT coming back. Is it a factor of just being oversold and bouncing back, or is there more at play? Is there more buying? You saw a few fund managers that have come through in the month of April and that have bought into some of these large cap IT names. So
even mid caps, Persistent System, for example, has seen good buying from mutual funds this time.
Let's talk about some of the factors that are coming through, and then Mahima, we'll get into speaking to our experts for the day. But you've had a stellar recovery from the day's low for the Nifty 50, gains of over 300 points, and those gains, as we've already pointed out to you, are led by IT as well as the private sector banks. 23,300 ends up being a support level. 23,700 acts as a resistance level, at least in the near term. The trajectory, however, continues to remain choppy. Analysts believe that only once 24,000 is broken up on the upside would the Nifty then move beyond the range. Otherwise, it's going to remain range bound. For the Nifty Bank, the crucial levels is between 54,100 and 54,200, and the index hit a wall here twice on Friday before reverting to its lows. Immediate support is seen at the 53,300 level, as well as 53,200. We've got Hemen Kapadia joining us this afternoon. Hemen, as always, an absolute pleasure joining you and speaking to you. What's contributed to this move for the IT index? Is there a technical factor at play? And when you look at the benchmark performance and the recovery from the low point of the day, is it giving you a sign that there is reason to be optimistic, or are you holding that judgment as things stand right now?
A very good afternoon to you, Alex. Thank you for having me on the show. Always a pleasure. Very good afternoon to you, Mahima. I think IT index was oversold, Alex, deeply oversold. If you see 27,500 has been very strong support as far as the IT index is concerned. We breached that briefly intra-week last week. And yeah, we are bouncing. So as of now, I'll go with what you said. I'll hold my judgment. As of now, it's a recovery and it's virtually fallen off a cliff. So some sort of a bounce back, not entirely justified, but can be expected. And as far as the Nifty is concerned, Alex, there were three bearish gaps. One got covered up on Friday. Now today there was another bearish gap, so the Nifty bounced back and covered that up. So frankly speaking, it's all over the place, and a bullish gap formed a month back has still not been covered up. So long story short, I think we're not out of the woods yet. The VIX obviously won't come down much till this geopolitical scenario finishes playing out. And if the rupee keeps on hitting new lows and crude, which looks dangerous, Brent above $115, it's going to be script specific, but the markets will meander aimlessly. Obviously, there will be bounces. Pharma's given a breakout, so the pharma stocks will do well. But the unison or synchronicity in the market is missing until, I repeat, till the dollar scenario and the crude oil scenario doesn't exhaust its move, we're not going anywhere.
Okay, so Hemen, therefore, you're likely to remain range bound. That's my takeaway from what you're saying, unless something dramatically moves. And we're nudging 20 on the India VIX. So your point made on volatility is well taken. I do want to ask about the key levels that you're seeing for the benchmark Nifty 50 as well as the Nifty Bank, though. Do you see the possibility? You see private sector banks that are bucking the trend, so to speak. The drag is coming from State Bank of India today. Is there reason to believe that the Nifty Bank will move higher, or will it hold forth like the Nifty 50?
As far as the Nifty 50 is concerned, Alex, we're in a range between 23,300 to 23,800. The bigger range is between 23,300 to 24,600, but that's too large to be of any relevance. Nifty Bank, yes, I think very strong support. Cash market, spot at 52,600. I believe there is a recovery around the corner. It looks a bit oversold. But if I were to say that the private sector banks, if you look at HDFC Bank, Kotak Bank, especially HDFC Bank, Alex, we've been down for 5.5, 6 weeks. But the move from 820 to 750, the time taken is not matching the decline. What I mean to say is it's taken more time. We should have been below 700. That's not happened. So some resilience over there, and above 780, we could bounce back. So frankly speaking, stocks which have moved quite a lot are under pressure. Stocks which have been hammered down are showing relative strength. So from that point of view, private sector banks could do a bit better. The bank Nifty itself could hold. State Bank and the entire PSU sector, bank sector is suddenly weak. HDFC and private banks could recover some more.
Hi, very good afternoon to you. What about something like Alembic Pharma, which is, seeing a downtick of around 7%? And if not this counter, anything in the pharma space that you're liking as of now? This, of course, Alembic Pharma did come out with its earning on Friday itself, but probably the stock is seeing reaction today. So any view on the charts there?
5 weeks of a sideways moment, Mahima.
Yeah.
I believe this could have been a consolidation, but needless to say, it's given a downward breakout. So we can obviously now term it as a distribution. So weakness support at 709, and the volume spike is not as much as I thought it would be. Normally you have panic bottoms forming with huge volumes. Volumes haven't been enough, but if 709 breaks only and only then we see more downside, we should be okay. Pharma per se, I think it's one of the better looking sectors. It's given a breakout after a long consolidation. So you have Ipca, you have Sun Pharma, you have I think Dr. Reddy, Divi's Labs. Gland has gone berserk today, but many of these stocks are looking good. And if the sector itself has broken out, Mahima, I mean, you will have them popping up like popcorn, one day this, one day that. So in a market which is, frankly speaking, wobbly, has been for some time, I think pharma stands out in technical green shoot, which could do better selectively, of course.
Absolutely, and I agree with that, because if you take a look at how Nifty Pharma has done over the past couple of weeks, it's the one resilient sector that's kind of making sure that's not moving, at least in terms of where the markets go. But talking of pharma and talking of Gland Pharma, it's been a robust Q4 on both domestic as well as global fronts, and it of course did deliver a healthy Q4, and on the back of that we're seeing that uptick in the counter, and it has held that 14% gains almost throughout the day. And with Varsha joining by to give us a perspective on what's worked this quarter and what lies ahead. Varsha, over to you.
Well, a strong set of numbers Gland Pharma has given, and a lot of things are actually working. You have US and you have Cenexi, and the number of launches that the company has been doing. Starting with how the performance was, what's working for the company and what were the growth drivers. Of course, there was a strong US traction which was led by new launches and GPO contract wins. Even, CDMO also did well. Higher contribution from CDMO project boost revenue and margins for the company, while favorable product mix also support margin expansion that you are seeing, and the operating leverage and cost optimization has aided profitability for the company. There was an improved capacity utilization across facilities which supported growth, and also launch of key products and multivitamins has also helped. Now talking about the geography wise performance, US is one of the reason why you're seeing that sharp growth. Grew 24 to 26% year on year. Europe based business grew 15%, while India business was up almost 28%. Now the base business revenue was 22% year on year, which was led by core injectables and launches. Talking about the Cenexi business, which is the turnaround. Now Cenexi was acquired by Gland Pharma in 2024. Well, over here if you see, the revenue was up 4% and showing gradual recovery, better utilization, new product ramp up and price renegotiation has also helped for this business. FY27 revenue growth, talking about the outlook, is guided at around 12 to 13%, which will be led by launches and the CDMO projects going forward. But the growth is expected to accelerate when it comes to FY28 at 15% and 19 to 20% for FY29, and margins are expected to sustain at 25 to 26% when it comes to the consolidated level, and the base business margins are guided at around 33 to 35%. So good management guidance, then US business, strong US business, CDMO business, then Cenexi has all led to the strong Q4 for this company, and the going forward is also expected to be better. So hence you are seeing that buzz in Gland Pharma.
All right, Varsha, thank you so much for getting us those details. And, Varsha summed it up very well with regards to where the fundamentals of this company goes. But Hemant, specifically on Gland Pharma, and, just to adding to the point of what you were mentioning with regards to where pharma goes, 7 weeks of straight gains is what we've seen on the charts for the Nifty Pharma, just to give that perspective. But Gland Pharma specifically, now that it's seen a 14% of gain today itself, do you think there's more steam left?
Mahima, at the risk of sounding overly optimistic, I believe this is just the first step. I mean, we are going for starters, the main course and the dessert comes later. Look at the charts, Mahima. 33 weeks, I kid you not, 33 weeks of hatching eggs, doing nothing. Between 1400 on the downside and 2200 on the upside. We haven't even broken out from here. And if it takes 33 weeks to consolidate, I believe I would be surprised if we don't give some 30-40% returns from here once we give a breakout about 2200, and it looks like doing that. The mechanical indicators are supporting the move. Volume seems to be matching that, and it's been down in the downs for a long time. A sideways movement, relative strength, resilience, everything seems to suggest about 2200. This is just the beginning for Gland Pharma. Mahima.
Okay, all right. So that's the view coming in on Gland Pharma, and what Hemant was mentioning with regards to 2200. That was the previous resistance that we're tracking on this one. But with regards to where the next segment goes, heard on the street, we all wait for the segment, and we have my colleague Somit Sarkar joining by to give us all the chatter that he's been hearing from the dealing room. Somit, over to you.
Stellar recovery is what we have seen from the day's lowest point, but traders continue to remain light when it comes to market given the uncertainty and volatility that we are seeing in the market. And given the fact that we are in the last leg of earnings period, most of stocks that dealers have highlighted today are on earnings based. Firstly, they have highlighted BEL, Bharat Electronics, that is Nykaa and Page Industries. Dealers indicate that there are buy flows on the large HNI desk in all the three names. Now, dealers are expecting strong Q4 numbers from all the three counters in trade. Apart from that is JSW Energy. Here specifically, there was a big block deal that happened in the morning, and dealers have specifically highlighted that this is one counter where there are buy flows on the FII desk, and delivery volumes are also expected to be on the higher side. And lastly, a cash counter that dealers have highlighted is Nitco. There are buy flows on the PMS desk. Dealers are expecting a large land deal to be announced very soon when it comes to Nitco.
All right. Thanks so much, Somit, for that. So some interesting names stand out here. And Somit, the points that have been made on BEL versus Nykaa and Page Industries, all of them seeing buy flows on HNI desk, and still in the earnings season. So there's an expectation of a strong Q4. Hemant, do these names stand out on the charts as well? A BEL, a Nykaa, a Page Industries?
Oh, Alex, if Nykaa is concerned, we are safely ensconced in a medium to longer term up move. So, but we've spent the last 6 months being range bound, but range bound doesn't necessarily mean bad. We take out 280. I believe this move should continue. BEL is not bad, but thing is, it's sort of run out of steam the way I'd say it, at least for the time being. I mean, the stock has gone from 40 to 460, and last 3 to 4 months, 4 to 5 months, we haven't been able to take out the previous high, and we are sort of meandering over here. So the way I see it, if it closes above 465, everything is hunky-dory. If not, chances of us, we've already slipped into an intermediate correction. But the thing is, there's so much of strength in the stock. I believe we should have been below 400. That's not happening. So I wouldn't be that excited about BEL because it's distinctly top heavy. And I think it's on the cusp of a correction of a greater degree. So I'd wait just a bit.
Got it. Okay. Speaking of earnings, let's talk about Pearl Global because the numbers have come through, and the company's actually had a pretty good FY26, all factors notwithstanding, right? You've had a year that's filled with tariffs and various other headwinds. What do the numbers for Q4 look like, though?
Right. So overall, if you take a look at just the four numbers, revenue saw an uptick of around 7% odd. Largely, I think this quarter would have seen some disruption coming in with regards to where Middle East goes. EBITDA did, however, did sustain a 14% growth. Margins also expanded by around 60 basis points, and profit grew by about 25% odd. Plus, FY26 is where they've recorded, their 5,000 crore, milestone in terms of where revenues also go. I think higher volume growth and value-added product mix has supported the growth this quarter as well. But to understand as to what is the outlook going forward for FY27, we are now joined by Pallab Banerjee, who's the MD and CEO of Pearl Global, joining us now to talk to us more about what lies ahead for Pearl Global. Pallab, first of all, a very good afternoon to you, and thank you so much for taking up the time. My first question to you is that, as Alex was mentioning earlier as well, right? Tariffs, the Middle East crisis, etc. But you've still managed to grow overall when it comes to FY26. Just want to get a sense of, from a Q4 perspective, how were you able to manage a 60 basis points uptick in terms of where the margins go and the growth in EBITDA as well, considering that you would have faced some supply chain crisis because of the Middle East war? I think you're on mute, Pallab.
Sorry, thank you. Thank you for having me on your channel. To answer to your question about what happened in Q4, yes, there was a tariff challenge, which was more limited to India. But Pearl has got, in its strategy, we are quite diversified. We are manufacturing out of Indonesia, Vietnam, Bangladesh, India, and Guatemala. And on top of it, also, we have a very diversified market base as well. We do almost about 6 different category of product in the garment section. So keeping all these things in mind, we saw that the risk that is coming up, one after the other, there is some kind of mitigation because of this spread that we are seeing, diversified market as well as spread of manufacturing base that we have. Even Q4 also, India was affected by the tariff till about February end, but the other locations, we didn't have any problem of tariff.
Okay, interesting. Pallab, good afternoon to you. Alex here. Just wondering about the current scenario as you see it, because we're speaking to a lot of corporates that have managed Q4, and the numbers have actually looked in a lot of situations better than even the street had anticipated. But the street is still looking at the future with uncertainty, obviously. So we're trying to gauge from your sense how you see Q1 panning out right now, and whether you're being conservative in your expectations for the full year in FY27.
So in terms of our forecast, we have always said that we are trying to grow at between 12 and 14% year on year. Yes, if the opportunity is better, then we grow even more. But the conservative plan is in that range of 12 to 14%. So keeping that in mind, we have been building up our capacity and the capabilities across all these manufacturing hubs that we mentioned. Yes, now that what's going to happen in future? If I look at Q1 of 2027, order books are full. Definitely what we found is that the markets, the resilience in the market, I would say. If you look at US market, most of the retailers are doing pretty well at this point of time. If I compare with 2022, when Ukraine war started and the fuel prices were up in this range, definitely the US market had slowed down in terms of retail, and they had an over inventory situation that happened later on. So this year, what we are finding is that the resilience is much higher. The consumer behavior hasn't changed so far. Most of these retailers are forecasting growth. At least the one that we are working with, all of them are forecasting the growth. And that keeps us satisfied in terms of our forecast or whatever numbers that we are talking about. Other markets also, like Europe, which was quite slow for the last couple of years because of the Ukraine war. It seems like people have got used to it, if I may dare to say that. So I think that way the markets are, I'm talking about the consumer market and my customers, seems to be okay at this point of time, and they are forecasting growth.
Pallab, for FY27, first of all, I wanted to understand as to what capacity utilizations are looking at right now on an overall basis for FY26. And FY27, if I'm not wrong, you'll still do around 200 to 250 odd crore of capex. How will that be funded, one thing? And where will capacity utilization go at by the end of FY27?
So we are targeting to be about 120 million pieces of capacity by 2028.
Okay.
As we ended the financial year of 2026, we touched about 100 million pieces.
Correct.
In terms of established capacity, that means the infrastructure that we have is for that much. Now, as the order book starts growing, we hire the people, train them, and put them onto the additional lines that happens in this. So if you talk of 2026, we did about close to 78 million pieces we shipped. And by the year end, my capacity had gone up to 100 million pieces. So yeah, so that's the kind of utilization that you're looking at. And this capacity includes my own in-house 100% owned factories and some partner factories in Vietnam and Bangladesh.
All right. So certainly it's a tough operating environment for everybody involved, but wish you all the best for FY27. We look forward to touching base with you. Hopefully the next time we talk, it'll be after this geopolitical crisis is over.
Hope so. Thank you.
All right. Let's dial in to the Vodafone Idea conference call. It's ongoing right now to find out what the management has to say.
Keep this growth on. Got it. So how much more do you think this is possible? Because I can see we are at a significant discount on an ARPU versus the peers. So is there a significant gap which we can bridge through these efforts?
So two parts, Sanjesh. One is obviously we are looking at these differentiated offerings to, bridge some part of the gap, but I don't think the gap will be bridged only with this. The way to understand this is the mix of the customers that we have. As I said, we have almost 67% of our customers now on the smartphone, with 33% of them being on a feature phone. And I think that's a big lever for us to push, and that opportunity is available with us to upgrade our customers. So that's one. Second, when we look at our smartphone base and the split between the customers who are still not using data with us, though they are using smartphone on our network, that's a second opportunity that we see. And the third opportunity is there are a lot of customers who are still using a data quota, which is a 1.5 GB a day or a 2 GB a day, for them to move into a truly unlimited, non-stop hero data. So I think all of these things put together, we still see a large amount of opportunity that we have in the ARPU upgrade.
Got it. My second question is on the subscriber. We have almost reached to a flattish versus a decline historically. Can you help us understand how are we behaving in the areas or in the locations where we have added the network versus the areas we have not added the network? To just get a sense, what does it really mean in terms of capex and that translating into a subscriber growth?
Yeah, Sanjay, so if you see our deployment of 16,000 crore over the last 6 quarters that I spoke of, that obviously has gone into a graded manner in different circles depending upon the number of customers that we had in a circle. And I'll just pick up one circle, for example, Maharashtra. And this is one example. So we have circles like Maharashtra, Gujarat, Kerala, UP, some of these circles where we have invested a little more than the other circle depending upon the customer availability that we had and the gap that we had. We see a very significant change in the customer in 3 things actually. One, customer acquisition. Second, the quality of customer being acquired. And the third is on the base retention. So we clearly see a difference in the circles and in the areas within those circles where we have been able to add more layers, providing better experience, better capacity, and better coverage to the customers.
So any number you want to put where we have put the network, how much we have grown, just to understand the intensity of benefit we can get?
No, I mean, I'll say that the numbers are significantly better. We don't share the numbers circle-wise, but we can tell you that these circles that I named, those places, we've kind of significantly grown better. Also, one of the things that we are also seeing, which is helping both upgrading the customers as well as subscriber addition, is the number of 5G cities that we have been able to launch over the last 1 year, which is upwards of 80 now. So we can't share the numbers, but you can pretty much safely assume that these are some of the circles that I named. There, the differential is pretty significant as compared to other. Most of the circles have grown, but these circles have grown differentially over the other circles.
Got it. Very clear. My next set of question is more like on the OPEX and the fundraise. Network operating cost declined sequentially while we continue to add this site. What's driving the efficiency in the network OPEX? Number two, on the fundraise, where are we in terms of debt fundraise that we are anticipating to come? How soon? Because that will be key enabler in FY27 in terms of the execution of our plan. And one related question on the shareholding pattern. Now I think both the promoter probably post CLM adjustment for Vodafone and Aditya Birla Group taking the preferential issue now reaches probably first time an equal shareholding in the Vodafone and Idea. Will that change anything in terms of the board structure or the agreement between the promoters?
Okay, so three questions you've asked. One is on the OPEX, network OPEX, which I'll let Tejas answer. But before that, I'll give you an answer on the debt raise, and the second was on the promoter shareholding pattern. So on the debt raise, as you would know, we maintain our capex over the next 3 years for 45,000 crores. We are looking at a funded of a 25,000 crore and a non-funded of a 10,000 crore facility. We are deeply engaged, as we have said. It's a SBI-led consortium which is looking into it, which forms part of the PSU banks, the private banks, as well as the foreign banks. And we are very confident of closing that very fast. Don't want to put a timeline, as you would imagine, some of these things, unless until it's kind of closed, we would not want to share that. So that's on the debt, but we are very confident that our capex intensity of what we have spent in the last quarter or the last year is only going to intensify towards the total of a 45,000 crore that we have laid for ourselves over the next 3 years. As far as the shareholding pattern is concerned, as you would know, these are the clamp settlement current share.
Okay, so you heard the management of Vodafone Idea on their con call, but Hemen, your view quickly on the charts for this one. It's down 1.5%, though Q4 was largely in line, but down 1.5% as we speak. What are the charts indicating right now?
Mahima, is a question of crying wolf. Over the last, I'd say, 7 years, we've had multiple occasions where even technically, Vodafone Idea has looked good, promising, looked like breaking out. And once again, we're at the stage where things should start looking good about 13.15. Currently, mildly overbought, but the technical situation has improved significantly. Let's hope it finally delivers. A monthly close about 13.5 should make Vodafone look better, at least in the last, let's say, 6 to 8 months. So looks promising, but like I said, we've been here multiple times. Hopefully it finally goes through.
The view coming in on Vodafone Idea. With that, Hemen, thank you so much for taking out the time and helping us with all the stock that we discussed today. But with that, it's also time to slip into a very, very short break. On the other side, we'll get you top buy today, sell tomorrow calls as well. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury, Founder and Chairman Bharti Enterprises, Noel Naval Tata, Chairman Tata Trusts, UK Sinha, former Chairman SEBI, Kiran Mazumdar Shaw, Chairperson Biocon Group, C.S. Sethi, Chairperson SBI, Jayant Sinha, former Union Minister of Finance and Civil Aviation, Ramesh Damani, value investor and member of BSE, Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit, Business Leadership Awards, honoring excellence, coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts
Welcome back. You're watching India Market Close. We're joined on this leg by Nagaraj Shetty, who's technical and derivative research analyst at HDFC Securities, as well as Sudeep Bandopadhyay, who's Group Chairman, Tata Capital. Gentlemen, thanks so much for taking the time and good afternoon to you. We're speaking about Telecom, and let me ask Sudeep about this, because Sudeep, just over the course of the last 7 to 10 days, you had significant developments for both Bharti Airtel as well as Vodafone Idea. And if you look at Vodafone Idea and the results that have come through, the management commentary during the conference call, on balance, how do you look at the space, and do you see it as an opportunity, either one or the other, Bharti Airtel or Vodafone? How do you look at both?
Oh, well, I think after a very, very long time, Alex, Vodafone Idea looks like worth taking a bet on. With the promoters, I think the numbers have been decent. The ARPU is marginally moving up is a positive sign. They're not losing customers, which they have been losing on continuously. I think, again, is a good news. So operational efficiencies are probably coming back, which is fantastic news, because fundraising is one part, operational efficiency is the second part. Now the operational efficiencies are coming back, which is good. As far as fundraising is concerned, both the promoters are reposing confidence and coming back with investments of their own definitely is good news. Of course, it's got a long way to travel before they can be out of the woods as far as fundraising is concerned. The promoter contributing 500 million each is good news, but they have to raise much, much more through debt, obviously, before we can say they are out of the woods. But having said all that, I think after a very long time, Vodafone Idea is definitely looking like worth taking a bet on at this stage. As far as Airtel is concerned, I think there is no question in my mind. It was a good investment then. It is good investment now. There was a bit of a disappointment regarding ARPU not going up, and that will remain and linger for some time more. But beyond that, I think they're ticking all the right boxes. Their acquisition of incremental stake in the Africa operations is a good news for the consolidated business. They're deciding to invest less in the financial services business is again a good news, because we don't want, market doesn't want too much of diversification away from the core. So all said and done, Airtel has been ticking all the right boxes and they continue to do so. So there is no problem as far as Bharti Airtel is concerned from a long-term perspective.
So that's a holistic view on the entire telecom space that Sudeep gave us. But Nagraj, a very good afternoon to you. With regards to where the benchmarks go, the Nifty has turned into green. The resistance that we were tracking of around 23,700 levels, it's very close to that. And up about 0.2% largely, this being pulled up by a lot of IT names. So your quick view on the benchmarks right now, both the Nifty 50 as well as the Bank Nifty, because there's recovery seen there as well.
Hi, good afternoon. Yes, Nifty has been moving in a range-bound action over the last 3-4 sessions. On the upper side, 23,800 is going to be a strong resistance as per change in polarity. At the same time, 23,200, 150 is going to be a strong support. Having declined from the higher levels recently and bounced back from the lower levels, there is a higher probability that Nifty reaching towards 23,800, 900 levels in the near term as per the range theory. And before showing any breakout, once it breaks out, then the new move could come from the index upper side, but currently showing a range-bound action. From Bank Nifty has bounced back very well from the lower levels around 53,000 level, currently trading around 53,620. I'm expecting this to move towards the immediate resistance of around 54,500 levels in the next couple of sessions.
Okay, all right. So that's the view coming in with regards to where the Nifty 50 and the Bank Nifty go. But on to our bull versus bear segment. And today we're tracking Delhivery. The stock is seeing a sharp selling as investors have kind of reacted to probably the lower profitability and integration cost, despite a strong growth in terms of where volumes go in terms of transportation. And let's get in Jasmeet, who tracks us very closely, to understand as to what's worked and what's not worked this quarter. Jasmeet?
Well, thank you for that, Mahima. Now, if you look at this particular counter, we do make a note that the overall Q4 was quite positive for the company, and even the brokerages have turned bullish on this particular counter while hiking the target price. But we also have a few underlying points, which is something that the street's not liking. Let's quickly understand the bull and the bear case of the each scenario. While we look at the bull case, we do see the overall express volumes is an uptick of 73% YY basis on the consolidation basis of the new entity they have acquired in the previous quarter. But on the bear case, the overall realization is down nearly 60% on YY basis, which basically mean though the company has increased the volume growth in this particular quarter, but the profit they earn per parcel is reduced in this quarter, which is down 60%. Well, the second bull case is the overall free cash flow conversion for the company. They have been ahead of the guidance and they are already free cash flow positive. But on the other hand, though their EBITDA is 80% moved up in the Q4, the overall PAT remains flat. Now, this comes on the back of the concern of the increased depreciation cost, also an increased integration cost, which is saw in this quarter. Now, if we look at the third bull case, we do note that the overall PTL, that's a part truckload margin, is up nearly 270 odd basis point on YY basis and touched that 13.5% mark. But this particular mark still remains far away from that range of 17 to 18%, which the management has guided, while this also comes after they have acquired a new entity. Now, if we look at the fourth case, the management remains quite bullish when it comes to the overall e-commerce growth, and they have given the overall guidance of roughly 15 to 20 odd % going ahead. But on the macro level, we do know that the overall quick commerce increasing will generally end up hurting the volume of e-commerce, which will be a key concern, and it might be difficult for the management to reach the guidance level of 15 to 20 odd %. When we look at the last case, we do make a note that the brokerages have turned bullish in this particular counter. Something like Goldman Sachs have raised the overall target price to rupees 480 from earlier 420, but the valuation still remains expensive for this particular counter compared to peer. While Delhivery currently stands at 52 times EV by EBITDA, now something like a Blue Dart, the direct competition of Delhivery, is at nearly 12 times EV by EBITDA. So all in all, we do make a note that though company had a good quarter, but the overall growth outlook remains key concerning for the management.
Okay, Jasmeet, thank you so much for getting us those details with regards to where Delhivery goes. Sudeep, as Jasmeet was mentioning, I mean, valuations were never cheap for this counter for one, and realizations largely being impacted because of crude prices also going up. So overall, your view, one, on Delhivery, and secondly, the entire space, when it comes to logistics.
Well, I have been liking Delhivery for a very long time. It was a little unfortunate that they haven't delivered or they haven't performed the way it was expected to do. But finally, I think things are falling in place. They have shown quite a good amount of growth on top line this time, and it's quite impressive, I must say that. In spite of competition, in spite of challenges from multiple other areas, I think the growth has been commendable. Yes, the profit is flat because of higher depreciation, but at EBITDA level also they have performed well. EBITDA growth is good. So while going ahead, there will definitely be competition, challenges, and some of the large clients will be tempted to have their own delivery arm like a Misho. But overall, I think it's a great business, and they have kind of reached a certain level of operational efficiency, which will be very difficult for a new player to achieve, or a partner who starts his own logistics business to achieve. So on overall, we are positive on this business, and we are positive on delivery as such. The share price has moved up, and in spite of today's correction, it is still around 450, 556 levels. The only challenge is they have Delhivery has a lot of institutional investors who have been waiting for exit, and that's why probably bulk selling keeps coming in the counter, pushing the prices down. But fundamentally, from a long-term perspective, we do like Delhivery.
So we're only speaking about delivery, though, Sudeep. In the broader logistics space, and I will throw ports into the picture as well, with the kind of uncertainty on the external front, there are possibilities that you will get some of these entities at relatively attractive valuations. One, do you agree with that statement? Two, do you see any opportunities currently as things stand right now?
Well, I'm not sure whether you will get really at a very for lack of better word, cheap valuation, because valuation in the Indian market for attractive stocks is not cheap. Look, I can talk about one logistics company which I've been liking for a very long time. It's from your group, Adani Ports. It's a fantastic company. It can have any parentage, it can have any person running it. But the fact is, the kind of assets they have created on both sides of both the coastlines, east as well as western coast of India, I think it's amazing. And India's export-import growth, India's economic growth is to a great extent will drive the future and the prospects of Adani Ports. It's a great company to own from a long-term perspective. And, if somebody can buy when there is some correction or a major market correction or a specific correction in the group itself, I think it would be great. But fundamentally, and from a long-term perspective, it's a great company. The other company which we have been liking in the entire logistics space for some time, since you asked, is All Cargo Logistics. Again, that is a good company to own from a long-term perspective. The last company in this space I will mention is Container Corporation. Again, a lot of opportunity, a lot of a scope for it to perform very well going forward, considering the economic development, considering the work they are doing. Price haven't moved up. Company hasn't performed the way it was expected to perform. But I'm very hopeful that future is good for Concor as well.
Okay, all right. So that's the view, of course, coming in. But now shifting focus slightly to the insurance space. There has been a global rush when it comes to the entire insurance space. UK-based Prudential is set to acquire around 75% in Bharti Life for around 3,500 crore. First major foreign investment, of course, in insurance after government raised the FDI limit to 100%. The deal valuation stands at that around, between that 4,600 to 5,600 crore range. And Bharti Life will explore strategic distribution partnership with Bharti Airtel as well as 360 ONE WAM. Now, currently, if you take a look at the stake, Bharti Life Ventures, is holding around 85% stake, and 360 ONE is holding around 15% stake. Now, moving forward, what will happen? Prudential PLC, overall, the group entity that is HCL Group is going to have a JV of 70 to 30. ICICI Pru is going to hold around 35% stake. ICICI Pru Life is going to hold around 22% stake. What will happen to ICICI Pru Life going forward? Sentimentally, it's slightly, considered to be negative. Regulatory norms require Prudential to cut stake in ICICI Pru to under 10%, and Prudential will seek appropriate time frame for this divestment going forward as well. And Prudential's health insurance operations will start in 2026 on kind of receiving the approvals that are required to kind of fulfill this entire stake sale that's happening. So this is the entire view with regards to what is happening. To take this forward, the conversation forward, and to understand more about this, we have Sharat joining by, who's going to give us a perspective in terms of what is the precursor to growing interest of global players in Indian market, especially after the 100% FDI relief. Sharat, give us more details on this one.
Well, if you look at it, largely this is the first time this is happening where the overall permission from 74% stake to 100% stake has happened. But we have seen already in the history that there has been a lot of interest by the global MNCs targeting the Indian insurance companies. Earlier it was JVs and now it is outright ownership as well. But how things have panned out, at times there has been some scuffle and changes as well. Foreign players in the Indian insurance space. Of course, this is the announcement which we have spoken about. But remember, there is a caveat to it. Prudent PLC, they have to reduce their stake in ICICI Pru below the 10% mark. Of course, they cannot have that holding for two companies. Also, interestingly, the alliance dissolved a 20-year-old life and general insurance JV with Bajaj Finserv, and now that has moved on to, you could say, they have actually moved on to the Jio Financial Services as well. There were some disagreements happening on the stake increase and the management control, which led to this dissolution. And now they have partnered in a 50-50 JV for the reinsurance operations. There are also another case, that's the AXA case. If you talk about it, AXA Life Insurance, previously they had partnered with Bharti Group in this Bharti AXA General Insurance. But of course, there were some changes, and after that, it was acquired and merged with ICICI Lombard in the year 2021 itself. And also, AXA did not form any direct life or general insurance partner at that time. Of course, there were some changes happening, and I've mentioned you all of them. But what are the key trends actually looking like? What does this suggest? The first one is it's a largely rare for a foreign partner company to change local partners. But now that's changing. Why? Because the dynamics are changing, because FDI increase is happening from 74 to 100%, and now we are seeing that in play as well. Now more MNCs are showing interest for domestic players. Now we had a conversation with a lot of analysts also, and they have stated that much more deals can be announced in this segment, and foreign firms are actually pursuing now a full ownership and control. Now it's legal. So these are the key trends which we are looking like, and these are the key, you could say, the tie-ups which are happening. Jio Alliance, we have ICICI Pru, Birla Sun Life, Tata AIA, and also other companies such as SBI Life, we have Canara, HSBC, Central Bank and Generali Insurance, and Max Life as well. Aviva also has with the Dabur's family office, and even PNB has with US-based MetLife as well. So this is the global rush coming in for the Indian insurance companies.
All right, Sharat, thank you so much for getting us those details, and probably it's following the wave that we've also seen in something like a Shriram Finance, right? The same wave probably is being followed in the insurance space as well. Nagaraj, your quick view on any of the insurance counters, if any, that are looking attractive on the charts right now, that you find attractive in terms of making an entry as we speak?
Yes. SBI Life is the one sustainably of around 1750 levels.
Okay, I think we have some audio issues with regards to where Nagaraj's audio goes. But Sudeep, while we try to fix his audio, any view on the insurance space, any particular counter that you'd like?
Well, I've been positive on overall insurance space for a very, very long time. But remember, it's a long-term business. Nothing should be expected to happen overnight here. We have fantastic companies which are building towards a great future. We do like SBI Life for a long time, and we believe that it's a good opportunity to pick up SBI Life, taking opportunity of a little bit of correction, which we have seen in the recent past. This transaction, which we have been talking about, I think is a very interesting transaction. Because Prudential wanted some kind of control, and they were not getting control at ICICI. So obviously they have been reducing stake there, and they wanted control. And now with Bharti, they have, they are in control. And I'm sure at some stage they will like to go up to 100% if possible, as far as this venture is concerned, and come out of ICICI Prudential completely, maybe or retain a token holding. Anyway, they can't go above 10%. So there will be some pressure on ICICI Prudential stock for some time, because there will be an exit by a large shareholder looming there. So that pressure will be there on this counter. Apart from that, I think we do like HDFC Life as well. And HDFC Life also can be picked up from a long-term perspective.
All right, HDFC Life. Bear in mind that these stocks have not done too much. And if we have Nagaraj back, I do want to ask him about the technical charts and what they throw up. Because barring State Bank of SBI Life Insurance, you haven't had a big performance by the other two players. So how are you seeing the charts?
Yes, SBI Life has been constantly moving up from the lower levels. After the reversal from the 1800 levels with the bottom reversal, the stock has been continuously moving up, higher tops and bottoms on the chart. The overall chart structure is looking positive, currently placed near the 200-day EMA hurdle. I think more upside is likely in the next couple of weeks. 1920, 1930 is going to be the hurdles to go out in the next 1 or 2 weeks.
Right. On to an NDTV Profit news break confirmed. We told you on the 15th of May that TVS Group is planning a stake buy in Jana Small Finance Bank, and that has indeed been confirmed. The company is sending an update to the stock exchanges. The stock is down about 6% or thereabouts. Shivam joining in to tell you about the details there. Shivam, what's been sent to the exchanges?
Well, yes, TVS Venu and Jana Small Finance Bank have entered into a share purchase agreement, and TVS Venu, which has a long-standing presence in Indian financial services sector through its NBFC firm TVS Credit Services, which offers consumers and retail loans under TVS Motors, and this company is also will acquire a stake in Jana Small Finance Bank, and this acquisition will be done through the firstly the combination of primary issuance of warrants and secondary purchase of equity ownership. Now this equity ownership is capped up to 9.9%, out of which 4.9% will be acquired by TVS Motors, and if we talk about the aggregate stake sale worth, it is around 193 crores. Now looking at the few prior acquisitions by the TVS Venu, they have also signed definitive agreements to acquire 100% stake in PGIM India Asset Management recently in April 2026, and the company which was owned by the Prudential Financial.
Okay, Sudeep, any view on Jana Small Finance Bank? And ultimately, these are entities that head towards a natural progression, and their hope ultimately one day is to be a universal bank. Are you looking at it from that lens?
Not really right now. I think it's a long journey, and the RBI has a lot of criteria before that is allowed. Just recently, they had refused one of the peers, and they didn't allow them to become a universal bank because their asset distribution was still not, acceptable as far as RBI is concerned for the transition to happen. So there are a lot of steps. And at this stage, I think this is a little too premature. I completely agree with you, Alex, on the trajectory. Eventually, they need to, and they should become universal banks. But Jana, I think there is some distance before it reaches there.
Okay. The other stock that is in focus today is Amber Enterprises. Now, overall, if you take a look at prima facie, the Q4 numbers, they were not bad, right? EBITDA did beat street estimates. Revenue saw an uptick of 11%. EBITDA saw an uptick of 21%. Margins improved to 8.6% versus that of 7.9%. And net profit also did see a growth of around 15.3%. And this was largely in line with what the management had guided for as well. But I think the stock has taken a knock today, and this is on account of the FY27 guidance not being at par with what the street was expecting. They've given a guidance of growth of around 40% in the electronics space and 30 to 35% in the sidewall space, where the expectations were that the electronics space growth could have been up to 50% versus the guidance given at 40%. Plus, even in terms of where the margins go, they've cut the margin guidance for FY27 from they were expecting a cut of 50 basis points earlier, which they have now gone out and said that there will be a cut of around 100 basis points, and that's something that the street is not happy with, and that's why we're seeing that downtick of around 15.7% in trade and almost at its day's low point. So that's, of course, with regards to what's happened with Amber Enterprises. And after positioning its, quarterly earnings, Amber Enterprises, after seeing that kind of pressure, the company's management is kind of did in its con call, did say as to what the margin impact temporary is going to look like and will last only for the next 2 quarters. Listen to what exactly they had to say.
Whereas other contracts like defense contracts or telecom contracts or the data center air conditioning contracts which are now getting signed, those are the contracts which have gotten pass on through. And that's the reason why we gave a just update to everybody that this is temporary, of course. You would have seen in last 7 years we have been able to pass on. And we will continue to pass on, but since it is momentary, but we thought that we should be, it's our duty to inform everybody that next 1 or 2 quarters should be, you should see this hit coming in.
Okay, all right. So that's the reason why the stock took a bit of a tumble. So for different reasons, you had KEC International on one end, you have Amber Enterprises on the other end, both reacting very sharply on the downside, Sudeep, to the earnings. The two that did relatively okay are Syrma SGS and Dixon. How do you view the EMS space though?
Well, first of all, Alex, this is one space which is priced to perfection. So even little bit of disappointment in the earnings or the management commentary creates havoc with the stock prices. And that's exactly what we have, whether it's Amber or it's Keynes. Whereas on the other hand, I think Dixon, the results were better than expectations. Commentary was all right. Syrma we like. We believe that amongst in this EMS space, if one stock can be picked up at current level, that is Syrma. I think there are multiple growth levers and looking good. But one fact I think which we all need to understand is that first quarter, which is where we are now, is going to be challenging. And where from the challenge will come, which pocket the challenge will hit, it's extremely difficult to predict even now, because we are living in a very, very uncertain world with what's happening all around us as far as geopolitics is concerned. But geopolitics is not only geopolitics, it's hitting the economics, it's hitting the inflation, it's hitting pretty much everything. So we have to be careful as far as first quarter is concerned.
I want to pull up, and that's exactly the point that I want to make, Sudeep. Pull up the intraday chart for the Indian rupee, the USD INR, and it is in fact at an all-time low. You're seeing a late move higher in terms of value versus the USD, and we're at 96.35. Remember, in this chart, the higher, the worse it is, right? The higher it is, the worse it is. 96.36 now, and there were projections about a week back that in the coming months you would have a situation where the rupee would possibly head towards 97.5, and this is problematic for a number of reasons, both from the perspective of crude oil prices and the amount that is currently being paid to import crude at a price where Brent futures are at $110 or above. So that's one aspect. The other imports that are coming through, and of course you've seen the action on silver most recently, but also the increase in the duty that is paid on gold imports. And you've heard the Prime Minister exhort you or make an appeal to you to reduce your consumption of certain commodities, petrol and diesel in particular. This is all to do with the way that the USD INR is functioning. From the perspective of the international investor as well, this is not good news because it further reduces the dollar returns that have been experienced over the course of the last year to 2 years, which is why you've been seeing such concerted selling in the large cap stocks, particularly in the financial space, where you're seeing selling in the banking stocks as well as in IT stocks, which are seeing a little bit of an uptick now. But on that note, gentlemen, Nagaraj as well as Sudeep, thank you so much for joining in, and we look forward to speaking to you very soon. Mahima, How are we looking? We've come off the low point of the day, certainly. We're holding very close to that yesterday's close levels. What else are you seeing?
Right, so ending at a flat note for the Nifty 50 around the 23,600 levels. The resistance that we were tracking was at that 23,700 level. So just 50 odd points away from that resistance level is where we are closing at. So tomorrow's action will be a crucial one to see whether we are able to break that resistance of 23,700 or not for the Nifty 50. As far as the Bank Nifty goes, we've seen some downtick coming in the last couple of minutes, down 0.3% now at that 53,500 levels, but still it's been over 1,000 points uptick from the day's low point for the Bank Nifty as well. The mid-cap 150 has also seen some recovery. Let's try to pull that up in terms of where the broader end of spectrum goes, and the small cap 250 in fact has also seen recovery. There you go, from the day's low point, but still closing around 1.5% lower. Let's try to pull up the Nifty 50 heat map and see how things are looking like there right now. Tech Mahindra still leading that chart, about 4.7%, followed by Infosys. So IT names still topping in that list, and you have Bharti Airtel, Bajaj Finserv also doing fairly well. So Bajaj Twins, in fact both Bajaj Twins doing fairly well, Bajaj Finance as well as Bajaj Finserv. Tata Steel now losing the most ground. Tata Steel down, closes around 3% lower, followed by Power Grid, NTPC as well as SBI and Bajaj Auto. In fact, the entire auto pack also continues to be under pressure. Bajaj Auto, Eicher Motors, Maruti all seeing that downtick in that range of 1.5 to 1.8 odd percent. Let's pull up the sectoral heat map as well to see as to how sectors have done in trade today. And you have Nifty IT closing 2.7% higher. Nifty Pharma for probably starting and ending in green for 8th week in a row. We'll have to see as to how this week ends, of course, but last 7 weeks Nifty Pharma has ended in the green, and you have Nifty Media and PSU Banks losing the most ground. Nifty Media down by about 2%, PSU Banks down by about 1.8 odd percent. So that's with regards to where the markets go. But with that, completely out of time on this edition of India Market Close. Thank you so much for watching, but do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi. Week.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that has happened in today's trading session. But let's kickstart the show by taking a look at the markets first things first. And the markets, in fact, staged a late recovery today. You do have the Nifty that held near the 23,600 mark, even at close. Sensex also managed a modest, close to 60 point, about a 70 point uptick also coming in. You're looking at a volatile session. And benchmarks, in fact, stabilized into the close, suggesting resilience, but also a little bit of caution at those higher levels. Moving on, then, let's also talk about the sectoral picture, and the breadth was weak in today's trading session. Most sectors ended in the red, with PSBs and autos leading losses as well. And IT and pharma, those are the two sectors that really stood out, holding firm, offering some little bit of support to the otherwise tepid market. Let's also move on and talk about oil prices. Oil is on the boil again. Brent above $111 a barrel. WTI close to that $108 a barrel level, as well as tensions with Iran escalate. This after US President Trump sharpens the warning, saying that the clock is ticking on a deal to reopen the Strait of Hormuz. And we'll talk about that as well in just a bit. But before we do that, elevated crude prices on rising supply also dragged Indian oil marketing stocks lower. But overall, you're looking at $111 thereabout when it comes to Brent. Moving on, then, let's also talk about ICICI Prudential Life, that is also all set to acquire a majority stake in Bharti Life, which will require it to cut its holding in ICICI Prudential Life due to regulatory norms. Meanwhile, ICICI Bank has indicated that it will retain majority control in the life insurance venture. And on to something like an Amber Enterprises now, that posted a steady set of numbers in the fourth quarter. When you talk about the stock as well, about a 15.5% downtick coming in. You do have the consumer durables business that led the beat, helping margins improve even as the electronics division really remained a little bit under pressure. And that seems to have weighed on the stock as well, as you can very clearly see on your screens. Now, the management also struck a little bit of a cautious note on the financial year 27 guidance, another trigger coming in for the stock, which comes in below street expectations when you talk about this particular guidance as well. And this is despite strong growth targets for the electronics and Sidwall businesses. And on to something like a skipper that secured fresh transmission and distribution orders worth about 1,200 crore rupees across domestic and international markets. Now, the win includes high voltage line projects in India, along with tower and monopole supply orders for Latin American markets, strengthening the company's order book and overseas presence. On to Aarti Drugs, that reported a mixed set of numbers in the fourth quarter. The stock, of course, was not doing all that much, but you're looking at a strong sequential recovery, but softer year-on-year profitability. Now, growth, when you talk about that, it's supported really by higher production at the Sayakha facility and improving demand, while margins remain under pressure from the API pricing weakness, and coupled with that, elevated raw material and logistic costs and startup losses coming in from the new plants as well. In terms of the outlook coming in from the management, they're talking about how pricing trends seem to have begun to stabilize. since September last year. Moving on then, let's talk about Gland Pharma that delivered a strong set of numbers. Look at that 15.5% uptick also coming in when you talk about this particular counter. On the back of a robust US demand, new product launches, higher CDMO contribution as well, and you're looking at margin expansion and a sharp one at that, as operating leverage and a favorable product mix supported profitability. The company also signaled a steady turnaround in the Cenexi business and maintained a healthy growth outlook when it comes to the next 3 years. On to Tata Steel, that's plumped despite a strong fourth quarter set of numbers, as the company really flagged continued uncertainty around global costs and overseas operations, something that weighed on the stock as well, with that 3% downtick coming in. And the company really reported record India deliveries, though better steel realizations, stronger margins also something that you're looking at, while losses in the UK narrow and the Netherlands business turns EBITDA positive. Now, investors remain cautious over global demand as well as regulatory concerns. Moving on then, let's talk about brokerages in terms of the verdict coming in on Tata Steel. And they remain divided. Goldman Sachs is maintaining a neutral stance with a target price of close to 218 rupees, flagging uncertainty around the Netherlands business. Morgan Stanley staying overweight with a target close to 200 rupees, citing strong results and a supportive outlook. Now, when you talk about the word coming in from Citi as well, they're maintaining a sell rating with a target price of 200 rupees, warning of potential cost pressures and limited upside. On to Symphony then, that was also trading under pressure after the company takes a one-time hit on its overseas business. Now, the company's booked an impairment on its Australia unit as part of a balance sheet reset, while the move results in a sharp write-down of its entire investment management. Is also saying that no further impairments are expected going forward, though the stock was trading with a little bit of pressure, 7.5% downtick coming in on this one. On to Afcon's Infra, that also faced a setback with 2 overseas project cancellations, and look at that 5.6% downtick coming in. When you talk about the stock as well, and the company has lost 2 motorway tenders in Croatia, together worth around 4,500 crore rupees, which were awarded last year. Now, the cancellations could really weigh when it comes to the near-term order visibility and execution pipeline. On to Alembic Pharma, that reported a mixed set of numbers in the fourth quarter, with margins under pressure but profit growth remaining strong. Now, the India business saw steady growth coming in, led by key therapies, while the US formulation segment posted a little bit of healthy traction also coming in with new launches. When you talk about the company, it's also stepping up its presence in the US branded space, marking a strategic shift towards specialty products. The stock was trading with a little bit of pressure, 7.6% downtick coming in on this counter as well. Let's also move on and talk about Delhivery, and there you had a strong set of numbers coming in that really failed to cheer the street though. But when you talk about the earnings fine print, about a robust growth and improving margins is something that you're seeing there. Now, the performance is led by a sharp pickup when it comes to express parcel volumes and steady traction in the part truckload business. Margins expand on operating leverage, but higher integration costs keep profit growth muted. The company also turns free cash flow positive, signaling improving financial strength. On to Coal India next, that moves a step closer to listing its subsidiary Mahanadi Coalfields, and the government has cleared the proposal under the alternative mechanism route, allowing stake dilution. The company may divest part of its holding through an offer for sale, while MCL could also raise fresh capital. The overall dilution, however, is likely to be capped at a quarter stake. On to Zydus Wellness now, that reported a strong top line, but margins came under pressure in the fourth quarter, 1.3% thereabout downtick coming in, 1.5% downtick coming in on this particular counter. But when you talk about the growth, that was largely driven by robust demand, even as higher costs weighed on profitability. Net profit, however, sees a healthy uptick supported up by operational strength and lower base. The company has also announced a final dividend to the tune of about 1.2 rupees per share for shareholders. Moving on then, the government tightens curbs on silver imports to rein in the rising import bill. Imports of key silver categories are now shifted to the restricted list, covering a bulk of inflows. Importers will need licenses going ahead as part of its efforts to curb non-essential imports and support the rupee. Now, the move follows a recent hike in import duties on precious metals, and when you talk about the word coming in from the experts, they're saying that it may not really cause much of an impact, at least at this point in time. Moving on then, let's talk about China's growth story that is losing a little bit of steam. April data shows a clear slowdown, industrial output cooling, retail sales slipping to multi-year lows as weak domestic demand weighs heavily. At the same time, rising energy costs linked to the Iran conflict. That's something that you're looking at, adding fresh pressure on the economy while exports have held up and the fuel price controls have offered a little bit of cushion. Input costs are climbing still, squeezing factory margins and threatening consumption. Bottom line really is that China is managing the shock, at least for now, but if global tensions persist, the recovery could really face deeper cracks. Moving on then, let's talk about a tentative reset in US-China trade ties. China is committed to buying at least $17 billion worth of US agricultural goods annually over the next 3 years, marking a significant step after last year's tariff-driven collapse in trade. US farm exports to China had plunged sharply as Beijing diversified away from American supplies and reduced reliance on key commodities like soybeans. And that's agri-commodities that you're talking about. Now, alongside fresh purchase commitments, China is also moving to resume imports of US beef and poultry, signaling a broader effort to stabilize agricultural trade. Moving on then, let's talk about IKEA that is tightening its cost as demand weakens. The global furniture giant, in fact, is planning to cut close to 850 jobs as falling consumer spending and higher input costs start to bite. The pressure is coming from multiple fronts. So you're looking at rising sourcing costs making it to that list, add to that US tariffs, softer footfall across large format stores, and in response, IKEA shifting strategy, moving away from big suburban warehouses towards smaller city center formats to attract shoppers back. Moving on then, let's talk about Russia's attempt to monetize a key seized asset that has hit a roadblock at this point in time. The government failed to auction its stake in a gold miner with no bidders showing interest in the sale. This was a majority stake taken over the last year after a court-ordered seizure from a private owner, part of a broader wave of nationalizations. But the lack of investor appetite, that's really raised fresh questions around pricing, risk perception, but also investability of state-controlled assets. The bottom line here really is that Russia's asset sales push is facing resistance and investor caution is clearly visible. Moving on now, let's talk about SEBI that is sharpening its focus on the risks coming in from artificial intelligence, but not in the way that you might expect it really. Now, you do have the chairman who's talking about this, saying that the biggest concern around AI tools is not trading manipulation, it's cybersecurity. Financial markets today run heavily on software systems, and any vulnerability can really open the door to cyber attacks, with potentially serious implications also meant there for market integrity. Now, the regulator is also pushing for stronger safeguards, ensuring all software, including third-party systems, is well protected and regularly updated. On to Samsung then, that is in last-minute talks right now with its labor union trying to avert what could be the biggest strike in its history. More than 45,000 workers are threatening an 18-day walkout starting later this week. Now, this is raising fears of disruption to both South Korea's economy, but also global supply chains, and that's also something that you're looking at. The timing could not be worse, really, and the strike threat comes amid a global shortage of memory chips critical for AI data centers, smartphones, and laptops. That shortage has already pushed profits higher for Samsung and its peers, but it also means any disruption could really ripple across the tech ecosystem. Moving on then, let's get you some national news. Congress leader V.D. Satheesan has taken oath as the Chief Minister of Kerala, marking the return of the UDF government to power in the state. The swearing-in ceremony was held close to 10 a.m. at the Central Stadium in Thiruvananthapuram, where the governor administered the oath to Satheesan along with his full cabinet as well. Now, the new ministry features 11 Congress ministers and key allies from the IUML and other coalition partners, reflecting the broad alliance structure of the UDF. Top Congress leadership, including Mallikarjun Kharge and Rahul Gandhi, were present at the ceremony, underlining the political significance of this particular win. And this is a transition that you're talking about that also ends a decade of left rule in Kerala, with the UDF now taking charge after a decisive electoral mandate. Moving on then to panic at Bihar's Sasaram railway station this morning after a passenger train bound for Patna caught fire. The blaze broke out in one of the coaches while the train was stationed on the platform shortly before departure, with visuals showing thick smoke billowing out. Passengers, in fact, rushed off the platform as railway staff and firefighters moved quickly to contain the flames. Initial reports suggest a possible short circuit may have triggered the fire, but an investigation right now is underway. Importantly, no casualties have luckily been reported, but one coach was completely gutted in the blaze. Moving on then, let's talk about PM Modi, who's landed in Oslo for a key two-day visit focused on strengthening India-Norway ties. He'll be holding bilateral talks with the Norwegian Prime Minister, with discussions centered on trade, technology, investment cooperation, and you're talking about a historic trip really. Modi's first visit to Norway and the first by an Indian Prime Minister to the country in 43 years. During the visit, PM is going to be meeting the King and Queen as well while reviewing the progress when it comes to bilateral relations and exploring new areas of partnership. Now, when you talk about this particular visit, it's coming in amid a broader push to deepen economic and strategic engagement with Nordic countries. Moving on then, let's talk about Delhi Chief Minister Rekha Gupta, who's taken a metro ride to kick off the government's Metro Monday campaign aimed at promoting public transport and conserving fuel really from Kashmir Gate to ITO, along with ministers and officials. And the Chief Minister led by example, urging citizens to switch to public transport in their daily lives. The initiative follows PM Modi's appeal for austerity, fuel conservation amid global tensions, particularly in West Asia. Now, Gupta's also stressed that greater use of metro and buses can really help tackle Delhi's pollution and traffic congestion, with the government promising better connectivity and convenience. The push now is to make public transport a daily habit really for Delhi residents. And moving on then, a family's grief turning into a fight for answers in Bhopal. Relatives of 33-year-old Twisha Sharma have taken their protest to the Chief Minister's residence, demanding a fresh post-mortem at AIIMS Delhi and alleging foul play in her death. Twisha was found dead at her marital home on May 12th, and a special investigation team has now been set up to probe allegations of dowry harassment against her husband and mother-in-law. But the family says questions remain unanswered. They've refused to perform last rites, insisting the truth must come first. Moving on then, let's talk about international news then. Trump says that the clock is ticking, warning Iran to move fast on a peace deal or face consequences. Iran is not backing down. Its military now warning any fresh attack is going to be triggering unexpected strikes on US bases in the region. At the same time, tensions are spilling over. Saudi Arabia has intercepted 3 drones, while in the UAE, a drone strike triggered a fire near the Baraka nuclear plant with no radiation impact really reported. But Iran is raising the stakes in the Strait of Hormuz, preparing a system to control shipping and potentially charge transit fees. Now, the bottom line here really is that you're looking at a fragile ceasefire that is holding, but the risk of escalation is really staring back at you and building. Moving on then, an emotional night at Camp Nou as Robert Lewandowski is moved to tears after his final appearance for Barcelona. The departing striker receives a guard of honor from his teammates and staff, bringing a memorable chapter to a close. The Polish striker was given a standing ovation when he was substituted in the second half against Betis before addressing the crowd on the pitch after the game. Moving on then, Chelsea have appointed Xabi Alonso as their new manager on a 4-year deal, handing the Spaniard the task of reviving the club's fortunes. The appointment comes after Chelsea's FA Cup final defeat to Manchester City and a disappointing Premier League campaign. With no European football next season, Alonso now faces the challenge of rebuilding the Blues and restoring their winning identity. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring Excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Markets kick off the week on a flat note. Benchmarks witness sharp sell-off with Nifty ending below 23,700 level. Broader markets underperform as volatility rises and most sectors end in the red. Rupee continues its downward spiral north of 96 rupees to a dollar, hitting another record low at 96 rupees 39 against the dollar. Recovers a bit to close at 96.36. Oil prices escalate above $100 a barrel as Trump warns clock is ticking and pressures Iran on a peace deal, escalating tensions in the Middle East war. India tightens silver imports amid dwindling rupee with immediate effect. High purity silver bars now shift from free to restricted import category. Move comes just days after government raised the import duty on silver and gold from 6% to 15%. SEBI Chairman Tuhin Kanta Pandey warns cyber threats linked to AI tools could really pose serious risks to market integrity. Pushes for stronger safeguards to improve cyber security. In a big development in insurance sector, British insurer Prudential PLC to acquire 75% stake in Bharti Life for 3,500 crore rupees. ICICI Bank to hold majority stake in ICICI Prudential post Bharti Life insurance deal. Kerala gets a new chief minister. Senior Congress leader V.D. Satheesan, sworn in as the chief minister today, marks the return of the UDF to power after nearly a decade. Prime Minister Narendra Modi arrives in Norway as part of his 5-nation diplomatic tour. Trade, energy and strategic ties are on the agenda. This marks the first visit by any Indian Prime Minister to Norway in 43 years. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the important news developments of the day, and starting with the Indian markets. Well, bearish sentiment really tightened its bear grip today as the benchmark saw intense sell-off right at the start of the week and started on a weakish note. So the broader markets, they underperformed the benchmarks as well, marking a significant amount of profit booking in the mid and small cap universe. Amidst the high volatility, remember the Nifty managed to close above 23,600 level while Sensex held tight near 75,200 odd levels. In fact, my colleague Jasmeet is standing by with a full action report on the equity markets. Tell us, Jasmeet.
Well, a flattish day for markets today. Nifty 50 ends flat with a positive bias. If you look at the top gainers of Nifty 50, we have stocks like Tech Mahindra Infosys gaining the most, up about 2% in terms of top losers in Nifty 50. We have stocks like Power Grid and Tata Steel both losing over 3%. If you look at the broader market, it underperforms the benchmark, while Nifty Small Cap 250 and Mid Cap 150 both down about 0.1% and losing in today's trade, ending in red. In terms of top losers, we have SJVN and Uno Minda losing the most in mid cap 150, down about 5%, while in terms of small cap 250, we have stocks like Jain Resources and Amber Enterprise losing the most. In terms of the key sectoral trends, all the sectors end on a mixed note, while Nifty IT emerges as a top gaining sector and gains about 2.4%, while Persistent and Coforge both are the top gainers in Nifty IT, gaining about 5%, while in terms of the worst performing sector, we have Nifty PSU Bank down about 1.98%. In terms of the stocks that did not perform well in Nifty PSU Bank, we have stocks like Bank of India and PNB both losing about 2.5%. Now, if you look at the key trends, while Nifty IT gains for the second consecutive session, while Nifty Pharma extends its gain for the fourth straight session. While if you look at Nifty FMCG, Nifty Auto, they snapped the 2 days of gaining streak, while Nifty Energy, Realty and PSU Bank declined for the second consecutive day in a row.
All right, Jasmeet, thank you so much for all those details. But despite the Dalal Street adding on to the weakness of global indices, well, the market expert Sandeep Tandon believes that India stands to benefit if foreign stock markets see a sharp correction. He told NDTV Profit that the easy phase of the global bull run is now behind us and the coming decade belongs to active money managers. Listen in.
We are in structured bull run as far as yields is concerned, inflation and yields. And this structured bull run can last till end of this decade, So which means maybe you can get cyclical corrections here and there, but broad trend is up globally, okay? And developed market yields will spike more than the emerging market in the years to come. So that's the background which we are mentally prepared. And second thing, we have said that geopolitical volatility will remain elevated maybe till 2032-33. So you are living in a high volatile geopolitical environment and you have to live with that. You can't say that, okay, now things will settle down, then I will participate. If it's the period, this is a period of like 10 to 15 years. If you're looking at this period, which started from the end of 2019 and still going on, then you can't say that I'll stop investment, I'll come after that, let the settle down. So I think you have to find opportunity within this sort of chaos.
All right, Rupee today slipped to another all-time record low at 96 rupees 39 paise against the US dollar, and it closed at 96.36. This shows that it's been continuing its downward spiral north of 96 levels, which is a worrying level. Elevated crude oil prices, global uncertainty and a stronger dollar really continue to remain the key risks for the domestic currency. Now, this weakness in rupee really comes in the backdrop of higher oil prices as Trump warns serious escalation if Iran doesn't concede soon. Now, his pressurizing rhetoric of the clock is ticking has really shot up crude oil prices above $100 a barrel once again. However, in an interesting comment made to NDTV Profit, economist Andrew Freris said that the Strait of Hormuz will become irrelevant in about a year, but at the same time, he also cautioned that if oil prices remain elevated, the US Federal Reserve will not be able to cut interest rates. Listen in.
Oil prices are not going to come down anytime soon. And that means that the Fed will not be able to cut interest rates. And that means that inflation in the States is going to remain high, persistently high, whilst oil prices don't come down. Remember, if the oil prices rise once and for all, that has a year-on-year impact and then it disappears. If they continue to rise slowly or fast, that will continue to have an impact on inflation. So the clincher here, there's nothing to clinch. We have already seen what actually is happening.
All right, within days of levying high customs duties on precious metals, remember, the government on Saturday imposed import curbs on silver as part of the move. Now, high purity silver bars as well as semi-manufactured silver products will need prior government approval to bring them into India. My colleague Rishabh Bhatnagar is here with more specific details. Tell us, Rishabh.
Absolutely. You have yet another step that has been taken by the government in order to tighten the import of precious metals. And this is, of course, with the forex concerns that have been raised with respect to the war, of course, being the context of all of this. You have the import of high purity silver bars that has gone from free to restricted now. This essentially means that importers will have to require licenses and approvals to bring in these specified silver products into the country. And what essentially this is that this move covers roughly more than 90% of the silver that actually ends up entering India. So this is a massive move in that sense, and a lot of the free movement of the silver metal will now be restricted. What we're also seeing is, of course, that this is a part of, this is the next step after the import duty was hiked from 6 to 15%. You already had a 9% duty sort of arbitrage that the importers already have to pay. But on top of that, there are additional licenses and approvals that are required now. What we're picking up is that there was a similar move for gold imports as well. the gold imports were brought in by DGF to sort of more tighten monitoring to check whether anything that's entering is also being adequately used. So that's what we're seeing when it comes to silver as well. Remember, India imports 80% of its silver requirement. Key supplies obviously coming from the UAE, UK, as well as China. So these will be the impacted geographies when it comes to imports. So that's what we're picking up on the latest move by the government when it comes to curbing the imports of precious metals and also the related forex concerns.
All right, big move there, and one after the other steps being taken. Thanks so much, Rishabh, for that. Now, earlier today, NDTV Profit spoke to Kishore Narne, who's the head of commodity and currency at Motilal Oswal Financial Services, about the silver import bill. And also, he said that from an investment perspective, these duties may not really impact demand for the devil's metal. Listen in.
Around 15% duty difference between the global price and Indian price. There is a lot of illegitimate sources also could be coming into play. So probably government wants to also monitor that. So at the same time, continue to be having a little of pressure on the investment demand. So that's where this thing again, compared to gold, silver is much smaller as far as investment is concerned on the quantity or even the value front also.
All right, the Finance Ministry has ordered a fresh round of austerity measures across states, run banks, insurers, as well as financial institutions, directing them to cut expenditure with immediate effect. According to a Department of Financial Services circular accessed by NDTV Profit, the directive applies to public sector banks, regional rural banks, PSU insurers, as well as the financial institutions. Shrimi brings us this story. She joins us on phone line. Shrimi, which are these austerity measures that the financial services in the PSU space are expected to adhere to?
Yeah, so the Department of Financial Services, which is a nodal department under the Finance Ministry, they put out an internal circular somewhere around 11 o'clock today, and they lay out a series of cost-cutting steps that institution under DSS will now have to follow. And one of the key directives is on the travel and meeting. Government asked these entities to conduct meetings, review, consultations, presentations through video conferencing unless a physical meeting is absolutely necessary. Then DSS also advised that foreign travel by chairperson, managing director, CEO and whole-time directors or even members should remain below the prescribed limit. So clearly a curve there under the existing rules. And wherever possible, such engagement should also be attended virtually. Government is also pushing, at this point, to all the financial institutions, including PSU, etc., for greater use of electric vehicles across PSU financial entities. And circular did point out that organizations have been asked to, replace petrol and diesel car hired by their head offices and branch offices with electric vehicles as far as possible. In fact, existing fleets will also be gradually shifted to EVs in a phased manner, is the suggestion coming in that circular. And that directive applies to all public sector banks, just to reiterate. That includes regional rural banks, public sector insurance companies, and even public financial institutions, all of them operating under these.
Right, Shrimi, thanks so much for getting us all those important details. So PSU financial services institutions asked to adhere to austerity measures. Now, the Indian insurance space is witnessing a major shake-up after UK-based Prudential agreed to acquire a 75% stake in Bharti Life for 3,500 crore rupees, marking the first big foreign investment since India raised the FDI limit in insurance to 100% from 74%. Now, the deal is also sentimentally negative for ICICI Prudential Life, as regulations will require Prudential to eventually cut its stake there below 10% from the current 22%. But this isn't an isolated move. My colleague joins us in with a closer look at the changing foreign playbook in India's insurance industry. Sharad is here to tell us all. Sharad.
We have seen already in the history that there has been a lot of interest by the global MNCs targeting the Indian insurance companies. Earlier it was JVs and now it is outright ownership as well. But how things have panned out, at times there has been some scuffle and changes as well. Foreign players in the Indian insurance space. Of course, this is the announcement which we have spoken about. But remember, there is a caveat to it. Prudent PLC, they have to reduce their stake in ICICI Pru below the 10% mark. Of course, they cannot have that holding for two companies. Also, interestingly, the alliance dissolved a 20-year-old life and general insurance JV with Bajaj Finserv, and now that has moved on to, you could say, they have actually moved on to the Jio financial services as well. There were some disagreements happening on the stake increase and the management control, which led to this dissolution. And now they have partnered in a 50-50 JV for the reinsurance operations. There are also another case, that's the AXA case. If you talk about it, AXA Life Insurance, previously they had partnered with Bharti Group in this Bharti AXA General Insurance, but of course, there were some changes, and after that, it was acquired and merged with ICICI Lombard in the year 2021 itself. And also, AXA did not form any direct life or general insurance partner at that time. Of course, there were some changes happening, and I've mentioned you all of them. But what are the key trends actually looking like? What does this suggest? The first one is it's a largely rare for a foreign partner company to change local partners, but now that's changing. Why? Because the dynamics are changing, because FDI increase is happening from 74 to 100%, and now we are seeing that in play as well. Now, more MNCs are showing interest for domestic players now. We had a conversation with a lot of analysts also, and they have stated that much more deals can be announced in this segment, and foreign firms are actually pursuing now a full ownership and control. Now it's legal. So these are the key trends which we are looking like, and these are the key, you could say, the tie-ups which are happening. Jio Alliance, we have ICICI Pru, Birla Sun Life, Tata AIA, and also other companies such as SBI Life, we have Canara HSBC, General Central Bank and Generali Insurance, and Max Life as well. Aviva also has with the Dabur's family office, and even PNB has with US-based MetLife as well. So this is the global rush coming in for the Indian insurance companies.
All right. Thank you so much, Sharad, for putting all that into perspective. Now, SEBI is stepping up its guard as a AI tool is really evolving and new risks really emerge for the market systems. In fact, Chairman of SEBI, Tuhin Kanta Pandey, says that the primary concern isn't AI per se, but the cybersecurity vulnerabilities it could really expose, warning that any breach in market systems could pose a serious threat to market integrity. Listen in.
No, the AI tools which are there mostly recently have come, that is in relation to the cyber security. So if the markets have, as you know, everyone has a software, and if there are certain cyber security is threatened, that means if vulnerabilities is found in the software very, very quickly, then, you know, there is a problem that we will be attacked, and those attacks may be successful, then that is bringing risk to the market integrity. So proactively we have to see that whatever the softwares we are deploying, even through third-party vendors, they are protected. There is an aggressive patch management, aggressive use of conventional tools to find that if there are any vulnerabilities that exist, they should be immediately patched up.
All right, in big earnings of the day, Tata Steel has reported a strong set of fourth quarter numbers with broad-based improvement across the global business. A sharp focus on operational stability helped it stay on track despite the global uncertainty and volatility in metal prices. But higher metal prices globally really helped the company and the sector. That's the word really coming in from Tata Steel Managing Director TV Narendran. Listen in.
We had actually focused on our operational stability, our cost takeouts, and a lot of that is manifesting itself into the numbers that you've seen. So while we've been helped by prices, I think the cost takeout targets that we had indicated at the beginning of the year, which was about 11,500 crores, is pretty much on track. I think we did about 95% of that. So that certainly helped. The second thing which has helped is Europe taking action to protect itself, because Europe suffered because of the trade actions by the US and also because of imports coming into Europe from elsewhere. So they've brought in quotas, they've brought in safeguard duties, and now more recently announced the CBAM, which will take effect later this year. UK has been a bit late in putting in safeguards and quotas, but I think they did that in March. So both in UK and Europe, we've seen prices go up in the last quarter, which is good. And in India, of course, prices had been creeping up since December. It had gone back to the levels that it was maybe a year back, and now it's looking slightly better because, again, there are cost pressures on the industry, so industry is trying to pass on some of those costs. But the weaker rupee and China steel prices going up a bit in the last 2-3 weeks has also helped reduce the threat of imports into India.
All right, and Vodafone Idea, which came out with its numbers over the weekend, is in focus also because Aditya Birla Group's plans to invest $500 million into the telecom operator. Now, we said that its board has approved the issuance of fully convertible warrants worth 4,730 crore rupees on the preferential basis to an Aditya Birla Group entity, which is the promoter group entity, as part of efforts to strengthen the company's financial position. On the earnings front, it has posted a net profit of nearly 52,000 crores, with margins really improving. During the earnings call, the management also said that higher capex development across multiple circles aided subscriber addition and customer acquisition. Also, they have plans of huge fundraise by debt now that promoter funding has already been announced. Listen in.
If you see our deployment of 16,000 crore over the last 6 quarters that I spoke of, that obviously has gone into a graded manner in different circles depending upon the number of customers that we had in a circle. And I'll just pick up one circle, for example, Maharashtra. And this is one example. So we have circles like Maharashtra, Gujarat, Kerala, UP, some of these circles where we have invested a little more than the other circle depending upon the customer availability that we had and the gap that we had. We see a very significant change in the customer in 3 things actually. 1, customer acquisition. 2nd, the quality of customer being acquired. And the 3rd is on the base retention. So we clearly see a difference in the circles and in the areas within those circles where we have been able to add more layers, providing better experience, better capacity, and better coverage to the customers. We maintain our capex over the next 3 years for 45,000 crores. We are looking at a funded of a 25,000 crore and a non-funded of a 10,000 crore facility. We are deeply engaged, as we have said. It's a SBI-led consortium which is looking into it, which forms part of the PSU banks, the private banks, as well as the foreign banks. And we are very confident of closing that very fast.
All right, confident of fundraising plans and capex in future. Vodafone Idea. On to an NDTV Profit news break, which has been confirmed. We told you on May 15th that TVS Group is planning to buy some stake in, or a minority stake in, Jana Small Finance Bank. Well, now we are for sure looking at an announcement that has been made that TVS Group is in total looking at buying out 9.99% stake in Jana Small Finance Bank, and that has been already announced. We in fact interviewed Sudarshan Venu, Managing Director of TVS Motor, on the back of this. Listen in.
We are broadening the offerings and the products in financial services which we as a group operate in. And I think as part of this, we felt that having a stake in a bank is something that we believe has a great opportunity for India. It strengthens the financial services vertical or division of TVS Motors. I think Jana is a very good bank. It has built a successful retail and MSME-led franchise with over 850 branches and over 12 million customers.
All right, and on to politics. Kerala finally has a new Chief Minister, V.D. Satheesan, and who, remember, was sworn in this morning. And this also marks the return of the UDF party in the state after nearly a decade. NDTV's Ritu now brings us more on this political development. Ritu, tell us.
V.D. Satheesan had remained very loyal to the party, and he was the one for all the 5 years was constantly seen working and ensuring that the allies are together ahead of that an election. And right after the election, it was allies basically of the Congress who helped him to become the chief minister as well, because remember, the allies had continuously mounted pressure on the Gandhi family, saying that if there has to be the chief minister candidate, then it can only be V.D. Satheesan and not anyone else. Therein, in fact, earlier there were also talks that K.C. Venugopal might become the chief minister, but of course on the other side it was allies who tried out very clearly towards the Gandhi family, saying V.D. Satheesan is the one who has to become the chief minister. And finally the day is here for the Kerala, where he has become the chief minister. On the day of oath taking itself, he in fact has declared that 2 guarantees would be implemented from the month of June, including that of free travel to women from June 15th. V.D. Satheesan, in fact, was also seen receiving Rahul Gandhi, Priyanka Gandhi and many senior leaders at the airport. He was the one with the bright smile, was seen welcoming them all for the ceremony. But of course, needs to be seen going forward what kind of government the UDF would really be able to provide to the people, and how are they going to ensure that all the guarantees will be coming into a place, in fact, because in the neighboring states wherever the Congress has been in power, there has been a huge criticism from the opposition. How things are really going to pan out in Kerala, that would be very interesting to see.
All right, thanks Ritu for that. It's a big political development down south. Now, Prime Minister Narendra Modi has arrived in Norway on a historic visit aimed at boosting India's partnerships across trade, technology and clean energy. This marks the first visit by an Indian Prime Minister to Norway in 43 years, with Prime Minister Modi really set to hold talks with the Norwegian Prime Minister King Harald V, and also participate in the India-Nordic Summit. Now, the Norway leg is also part of Prime Minister Modi's wider 5-state diplomatic tour covering the UAE, Netherlands, Sweden, Norway and Italy, with strategic cooperation high on the agenda amid the ongoing global uncertainty. All right, with that, completely out of time on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much for tuning in.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies, interesting small caps, some interesting mid caps and also some hidden gems. And today also I've got you a good interesting company after a strong quarterly numbers. But wait, try to guess the company. The first one is it's a Bengaluru based company. I would like to give you some more hint, try to guess it. The company deals with AC generators and electric motors. It's been buzzing of late a lot. Of course, last week there was a big jump in the numbers also, as well as the stock prices. And it's a very big multi-bagger. The stock is up 27 times. I'm not joking. The stock is up 27 times in the last 5 years. Try to guess the company. It's been buzzing all across. And of course, it's a quite powerful company, and that's also a pun. The company in focus is TD Power Systems. That's what we like to talk about. And interestingly, the important thing is the Q4 numbers. That's where we'll start our talking points. Also, a little bit of margin pressure is there in the industry or in the company. We'll try to understand that from the management. And why are we calling this company? We'll try to understand that as well. The order momentum, we need to look about that. Is that changing now from Q1? Will it be on the higher side? A lot of orders coming in, but when a lot of orders comes in, try to understand there's an execution risk also at play. So we'll try to understand this for the industry perspective also. Apart from this, the key question to be asked would be the demand trends, especially on the gas turbine segment, because this demand is showing a really strong revenue visibility. We have seen it across the industry. The margins and the top line guidance, are they giving this time any? We'll try to understand because they had given in FY26. So we'll try to get those numbers out and the investment plans for the large generators. Of course, will that happen in the next 3 months or because of geopolitical tensions, will the company step back, and the capacity utilization and capex plans? This is an important question to be asked and we'll try to get those numbers for you. Apart from this, the geopolitical stress, what kind of impact is happening? We are already seeing a little bit of it in the margins. Will it impact the supply chain also? That's a big question to be asked. And the outlook, of course, for the advanced automation and robotics, and which are the new areas which their orders are coming in. That's what we'll try to understand. And we'll be joined in by Nikhil Kumar. He's the MD at TD Power Systems, where he'll try to answer most of the queries sent by you and by me as well. But let's try to understand, what does the company actually do? Is it a very simple product for you to understand? I'll try to make it more simpler for you. Of course, it's a Bengaluru based company, but let's get into the details about it. Ye company karti kya hai? They makes AC generators and electronic motors. Of course, this is a type of we could say a current, alternate current. That is what we talk about. The company makes generators for turbines, जिससे energy generate होती है, and this is where the engines also come in, and there are special applications now because of new industries is there. That's what we'll focus on. They make motor induction and synchronous, and traction segments also. These are basically your motor segment which to talk about. Totally, they have around 8,055 generators across 113 countries. So definitely it is a global company. Company delivered a very strong Q4, and also there's an interesting corporate development, and the company announced a 1:2 share split as well. The stock already near its lifetime high levels to increase the retail participation. They have done that. 80% of orders comes just from exports, and that's what we have been talking about. These are the key details about the company. But what does a generator do? It's a very simple question, but I'll try to make it more simpler. It's an electromechanical device. What does this mean? This means that it takes energy from one segment and then it creates the energy which can be used as electricity. This is what it is. It's a bit technical, but I promise you I'll make it very easy for you. This is their core product, and based on that, other industries, there are applications also. If you would like to show the other applications, what happens in the industries, there can be steam, gas, water and internal combustion as well. But enough of science. Let's now talk about the order picture. The order inflow growth, that is what the market wants to look at. Look at that. It's up 51% on a year-on-year basis. And this is, of course, we are looking at the FY26 kind of numbers. The Q4 numbers, even if you look at that, that's also up 61% on a year-on-year basis. And the overall order to look at, that stands at roughly 1973 crore rupees. So that's a pretty interesting take, right? But how does the order book breakup looks like? And of course, we have broken it into domestics and exports, largely exports and deemed exports. माने कि SEZ से अगर जो जाता है उसे deemed exports भी कहते हैं. This is 64%. 21% is largely your domestic, and the smaller ones includes rail exports, domestic rail, spares, and also the Turkey segment. They have kept it separately. That's pretty interesting. So this is the entire order book coming in. But what's working for the company? It chal क्यों रहा है stock? The reason is strong operational and financial parameters. The second positive reason is FIs are increasing stake in the company. Of course, apart from this, there is an improvement in the order win rate. पहले 600 करोड़ था और अब management बता रही है 650 करोड़ होगा. That means there is an increase in the order flows. This application is happening across the new age applications, be it nuclear, data center, railway, and also hydro segment, and that is where the bullishness is coming in. And also it's a beneficiary for industry-wide high demand for generators. That is what we are seeing, the entire sector getting re-rated. But what may not work for this company, higher valuations, pretty high, and this is for the entire industry I'm talking about. And remember, when you get a lot of orders, the execution risk keeps piling up as well. And a couple of times this happens on the quarterly earnings, and the delay in the investment for larger generator, the large size generators, that's what the management has spoken about. They've given 3 months in their outlook, but that delay might be a concern. So this is the entire picture for TD Power Systems, but the entire picture for KYC in our show is via 8 parameters, and generally we of course take the usual ones, the income statement, balance sheet, cash flow. These are the holy grail of financial accounting. Apart from that, we also have the ROC to understand how that has panned out